Now, from Zimbabwe, let's head over to West Africa, specifically to Ghana. The economy there is set to benefit from a $3 billion Eurobond that the government's raised from international debt markets. Now, the overall target is to borrow around $5 billion or so this year to supplement the country's budget deficit. Economists, however, are deeply concerned about the country's rising debt levels, now standing at 76% of GDP. With the details, here's CGTN's Nabil, Ahmed, Rufai.
Business has started picking up for Solomon Bulawa. The demand for stationery has increased as schools and businesses reopen in Ghana after months of shutdown due to the coronavirus pandemic.
The income you expected to have, you are not getting it. Offices were not purchasing, schools were not purchasing. So normally we're even at home, you are not even coming at all.
Like Bulawa, many traders in Ghana are trying to recover from the disruptions caused by COVID-19. The government has secured a $3 billion loan from the international debt market to support economic growth. Ghana's currency, the cedi, depreciated by 4% against the US dollar last year. Analysts say the loan will help shore up the central bank's foreign exchange reserves.
The cedi is not strong when it comes to other exchange in terms of the US dollar. So with $3 billion coming in, obviously in the short to a bit of medium term, we can have a bit of currency stabilization in terms of the cedi. And that is also very key for every business or every economic activity in the country.
Ghana's federal loans have received public backlash, and economists are concerned about the country's rising debt, which is at 76% of GDP. The IMF has projected Ghana's debt to hit 86.6% by 2025.
As it is now, the government is paying debt that was raised, probably not during their time, but in the previous administration, and they are paying. Government is a going concern. But the point is the investment of this money. How are we investing it? Is it always going to be invested in paying recurrent expenditure, or we are investing in productive sectors that in itself will generate revenue for the economy? I think that is where the key link is for us going forward.
The government plans to use the loan to pay off some of its debts, as well as fund infrastructure developments, including building of roads and hospitals.
Ghana aims to borrow a total of $5 billion from the international debt markets this year. The government says the $3 billion loan acquired so far shows that investors are confident in the Ghanaian economy.
Aside from pumping the economy with the $3 billion loan, the government has also introduced new taxes this year to increase internal revenue generation. But some small traders like Solomon Bulawa say the taxes are making life more difficult in the short term.
Things are really going to be a little bit tough. The government does not really step out with its import duty. We are really going to have a serious crisis on our head.
Ghana is targeting a GDP growth of 5% this year. The government says it expects a rapid economic recovery as it further eases restrictions with the rollout of COVID-19 vaccination. And as his business expands, Solomon Bulawa hopes to restock more stationery in his shop. Nabil, Ahmed, Rufai, CGTN, Accra, Ghana.